Hey there, Canopy growth traders and investors. It's Rod with Power Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Also home to the best MJ community. Today is Wednesday, December 27th. Happy midweek, and I hope you had a great holiday long weekend. In this video, we'll discuss Canopy growth. We'll take a look at the chart, what to expect in terms of the technicals and price action in the days, weeks, months ahead. Spoiler alert though, I don't think that we're out of the woods just yet. We could see a little bit more weakness, especially after the reverse split took effect. But as always, this is not financial advice. This is for entertainment and informational purposes only. You should never ever buy anything based on anything that I write or anything that I say. And before we get to it, make sure to smash the like. It helps support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or when I go live. Just before we get to the content, this video is sponsored by Moomoo. Founded by a NASDAQ-listed fintech, Moomoo is an online broker based out of Silicon Valley with over 20 million users. There's some exciting news coming for Moomoo platform as they gear up to launch RRSPs and TFSA accounts in January 2024. Moomoo also offers an array of benefits such as $0 maintenance fees, ultra-low FX conversion rates, and transaction fees on average about $1.99 per trade. People still tell me to this day that they spend anywhere from $10 to $15 per trade. Well, that can go away with Moomoo. Extended trading hours from 4 a.m. to 8 p.m. Eastern Time, and you also get free access to level 2 market data, 40 plus drawing tools, and 100 plus educational resources, all for free directly on the app, which they have a mobile and desktop version as well. Last but not least, Moomoo is all set to launch another round of welcome rewards exclusively for RRSP and TFSA accounts. Stay tuned as more details on this will be coming soon. I will leave links for Moomoo in the description and in the comment section below. I also posted a video yesterday on tax loss selling and harvesting ending today. Today was the very last day to do that, and then also $7,000 extra contribution room for TFSAs in Canada for 2024. If you haven't seen that video, I would highly encourage you to check that out, but I think this is going to help the MJ industry and also CGC as a result. And speaking of which, over the next couple of months, we are going to see Canopy report earnings. So right now it's tentative for February 15th. We want to see official confirmation as always from the company, but last year they reported on the 9th of February. So we should see it, like I said, over the next month or so, month and a half. And investing.com analysts are expecting 76.58 million Canadian. And then in terms of revenue, and then in terms of earnings per share or EPS, negative 0.062. And if we bring up the Moomoo desktop app as well, you can see if you go over to your watch list, go to the analysis tab, and then CGC, you can go down to financial, and it actually gives you some estimates here as well. And I really like this feature. I love the app. I'm using the desktop app at the moment. They also have a mobile app as well, so you can have it on your phone on the go. But you can see here financial estimates. Revenue is forecasted at 75.232 million, and that's in Canadian. And it even tells you it's based off of 12 analysts, which is a really cool feature. And then their EPS here is forecasted at negative 0.517. I think that it's going to be at least a year or two before they really start to turn it around. They're finally getting rid of aspects of their business that were contributing huge losses. Think of the biosteels and the This Works, kind of right sizing the business and focusing more on an asset light model, right? So again, I think that it's going to be a few quarters. I think we could see a little bit more weakness on the chart as well. We'll take a look at the technicals here, but you can go over to the news tab. You can see all of the news pertinent to Canopy growth as well. But if we take a look at the technicals here, and this is all free within the app as well, tons of other softwares, and companies charge anywhere from $20 a month to $500 a year, or even $1,000+ a year, and this is all free within the app. So if we take a look at the daily time frame here, you can see we're bumping our head on the 50-day moving average. We failed to close above it yesterday, and then today we closed near the low of the day, and we know that the S&P 500 is likely due for a healthy and major correction on the weekly time frame. We went from the lows there at 410 on SPX all the way up to basically all-time highs without even changing a weekly trend. We have no support, and like I said, we can see a pretty hefty pullback in the broader market. It would just be expected and healthy, but obviously that would create headwinds for MJ and CGC specifically, and it won't be immune to that market weakness. And like I said, I don't think there's going to be any major developments before the end of the year. There was some talk that there was some progress potentially, or some talks and discussion with regards to rescheduling in Capitol Hill this week, but I'm not holding my breath. I think it's more than likely going to be in Q1, Q2, where we get some sort of response from the DEA or approval of Schedule 3 from rescheduling to Schedule 1 to Schedule 3. I'm still in the camp of thinking it's going to be in 2024, likely in Q1 or Q2. And like I said, I think right now with the MACD on the weekly time frame, due to see a potential bear cross, I think that that's going to potentially basically stall us out a little bit more here and create a little bit more weakness in the chart. We're also still waiting for monthly uptrends to confirm, so we're just looking for monthly higher lows, and then we'll need to form a higher low based on the monthly time frame. We'll need a higher low and then a higher high, and we're still working on the higher low at the moment right now, right? So we still got a lot of work to do in terms of the weekly time frame as well. If we switch over to the exponential moving averages, the EMAs, we still are a ways away before we see the month or the weekly EMA 12 and 26 bull cross. So you can see here it's getting close, and that hasn't happened since the run up in November of 2021 and into the highs of February 2021. So November 2020 and then February 2021. So we had our massive run up there after that EMA 12 and 26 bull cross. Then we had the bear cross, and then it's been a brutal 3-year bear market. And we're gearing up for another potential bull cross here. But as you can see, they did the 1-for-10 reverse stock split. And let this be a lesson too. I mentioned this to POW Group private members today, that if we zoom in here, we knew that the reverse split was coming, but a lot of people didn't really believe it. It was approved by shareholders, and then we had a massive move up, barely any support on the daily time frame, and then they sort of dropped the news. Even though we expected it, a lot of retail investors didn't think it was actually going to happen. And I was in the camp of thinking, well, there's a better chance of it ever happening now that it was approved by shareholders and the board, right? Telling people to, like the board was recommending that shareholders vote in favor of. So the fact that that was approved, that, in my opinion, was like an 80 to 90% chance. I thought that they would get an extension and then try to regain compliance organically and then potentially do a reverse split, but they shocked the market, and because of that, we ended up dropping on that news. And let that be a lesson. Next time you see a stock that does a reverse split, if it's a 1-for-2 or 1-for-3, it might not be as big of a drop, but something like a 1-for-10 or a 1-for-20, the bigger the number, it's going to be perceived as more bearish, and generally we get an overreaction. So in this case, if you were surprised by this move, again, usually when we get the announcement of the reverse split, we drop anywhere from 15 to 30%, depending on how big the reverse split is. But I don't think reverse splits are that bad, not that much to worry about, right? It's just a way for market makers to manipulate the market. Same on the way up, they do regular stock splits because people get priced out of the markets or priced out of a certain stock like Amazon, and then they usually use, retail investors, us, as exit liquidity. So we get priced out, and they say, people say, oh, I can't afford this stock, it's now $1,000. So they do a regular stock split, it's now $100, right? Shares go up, price go down in a regular stock split, and then they use people as exit liquidity. They're like, oh, I can buy Amazon now, it's only $100, right? It's a psychological thing. And then same thing on the way down. It's how they manipulate the market on the way down to regain compliance and maintain their listings on the US major exchanges, right? And then usually the retail capitulates near the bottom. And in my opinion, we could have expected more weakness as well, because generally when the announcement comes out of a reverse split, we can drop 15 to 30%. And I mentioned this, like I said, to POW Group members today. But then whenever it actually gets enacted and we start trading post-split, we usually see a little bit more weakness. And then that's exactly what happened again. So the reverse split took effect on the 20th of December, and then we dropped to another daily lower low. And then we had a massive 35% rally after that. So again, I don't think reverse splits are the end of the world. After the reverse split took effect, we actually popped up 35%. So volatility has been, it's almost like a day trader's dream at the moment for CGC and the MJ space, and a lot of the blockchain names as well, and crypto. But let that be a lesson to you next time. If you see a reverse split announced, don't be surprised if it drops 10, 20, 30%, depending on the size of the reverse split. It'll drop more if it's, a 1-for-20 or a 1-for-30. Obviously, that's going to be perceived as even more bearish. And then after the reverse split takes effect, we usually drop down and see a little bit more weakness as well, another maybe 10, 20%. Doesn't play out that way exactly every single time, but I would say on average, majority of the time, 80 to 90%, that's basically how it plays out. So again, we're still looking for the weekly EMA 12 and 26 bull cross. We're still looking for the daily golden cross as well. So if we go to the daily moving averages, you can see here we're still quite a ways away before we see the 50 cross above the 200 moving average there. So we still got a lot of work to do in terms of the golden cross. I think we're at least a couple months before that happens. Several weeks, if not a couple months. So we need that. That's what we need to see to be confident the bottom is in, factor number one. And then the next thing we need to see is weekly EMA 12 and 26 bull crosses, which is very close to seeing that. Like I said, the first time since November of 2020, and then the run up into February 2021 highs. And then we need to see monthly uptrends confirm with the low, high, higher, low, and higher high. And then we'll potentially see a monthly EMA 12 and 26 bull cross. So like I said, I think that there could be a little bit more weakness here with a weekly MACD bear cross on the horizon. And like I said, likely going to be a couple of months before we see any kind of real news catalyst in MJ, but there's tons of growth catalysts that are coming down the pipeline, and something to be aware of as well. Like I said, just keep in mind that the S&P 500 could see weekly consolidation at any point, any week now. So we just continue to watch the low of the previous week on the S&P 500. If that gets lost this week, weekly consolidation will be underway, and that'll be major headwinds for MJ and CGC. And then if the low of this week holds next week, then again, we look at the low this week, next week, and we will expect a major correction, and it'll just be healthy, like I said. But that's going to definitely be headwinds and spell trouble for the MJ space. But I'm going to be looking to add more to my MJ portfolio. Again, I did a video on tax loss selling and $7,000 extra contribution room to the TFSA yesterday, and I mentioned I was going to be adding some MJ stocks. If you want to check that out, you can see what stocks I was referring to, and then I'll do another video in the future once I actually buy. I might hold off for weekly consolidation on the S&P 500 to see how MJ reacts to that, and then that should likely give us another buying opportunity, in my opinion. But going in it there, it's Rod with Power Group. Thanks again for joining us on the Pursuit of Wealth. If you found this video helpful, please smash the like and share it with your network. I would appreciate it. Love each and every one of you supporting me along the way. Super tired today, so hopefully be back. I don't know if it's all the turkey or what, but hopefully I'll be back to my regular self tomorrow. Might be having a little bit of a cold here today, but feeling a little stuffy, but definitely looking forward to getting some more videos out toward the end of the week, and we'll see how busy I'll be. We have New Year's coming up. Like I said, wishing everybody a great New Year's as we close out 2023 and looking forward to 2024. Have a great one, and we'll see you on the next video.